Good afternoon, traders. Good afternoon. My name is Raul Rivera. I'm the founder of themarketprofile.com. Today is Wednesday, September 6th, 2017. Let's get started with today's video. Pretty good one today. Let's get started here with the S&P 500 as always. So we took a look at the S&P 500 early this morning, and we figured the way to play this one is on a trading range day. We're going to try to get long just below value and short just above value. When we split this one into, let's see, early this morning, what we had was pretty much a D-shaped distribution and also an inside day. An inside day is pretty much when the current day's high and low, which was right here at the time, is trading inside the prior day's high and low. So we were trading inside. We figured, we're probably going to remain in a trading range market, get long just below the low, get short just above the high. And we executed on that plan and switch over to hybrid view here. As you guys can see, we had marked this area up as a possible short for the inside day. This was pretty much just above the high. Prior to the market opening, this was green area just below the low. So I marked them in different colors to understand, just to sort of, visually remind myself what type of a trade these are. So red and green is always inside day. The blue is always value area. So trying to short here, got short two contracts at 24.65. But they did a little shake and bake on me. They did do a little bit of shake and bake, and I ended up taking a loss on this trade. You're probably looking at me like, how the heck did you lose on this trade? Well, on the high of this bar, things were looking really good. I mean, we had buyers, institutional buyers behind the trade, and we were moving up in imbalance, in positive imbalance. And I'm like, oh, here we go again. Probably gonna get taken out on this one. So let me get out very early. Took the trade off at 24.66 for 1.5 points loss. All I had to do was be just a little bit more patient in the trade. Was good for 6 points at its best. And I missed out on that. I mean, 6 points total, probably would have taken it out around 24.60, which would have been 5 points. Also happens to be the point of control on the profile for the day. And wasn't able to take that profit, but the idea was there to short. And I mean, as you can see, it did trade much lower from there. Other than that, we really didn't get to any value areas at all. This is how we were definitely consolidating for the day. If we could see, ended the day in a D-shaped distribution. There's no more than one distribution on this chart. Ending the day still on the inside of yesterday's range. So pretty much a lot of consolidation today, but a lot of trading volume also occurred. I mean, last I saw, we were 1,500,000 contracts that were traded on the day today. So pretty active session in the S&P 500. Unfortunately, a very tight range. Okay, next up we have the crude oil market. And this one, we trying to get long, as you can see. That was the area to get long. This one, pretty much early in the session, we determined that it's probably in a trend, right? So it's on a P-shaped distribution, on its way higher, probably trades higher. D followed by a P. Find a place to buy it. D, P, and then P up here again. Trending up pattern, remember, D shape equals consolidation. P shape equals trending up pattern. B shape equals trending down pattern. Right, so we're in a trending up pattern. So the idea was to get long at VWAP or TWAP. No range extensions today, so we were trying to get long at TWAP, and this one is just Absolutely unlucky. This probably would have been the trade of the day for today. So we were trying to get long right at TWAP right there. 48.76 was the exact number at that time. The very low of that bar, in fact, let me zoom in for you guys. Okay. Right here, the very low of that bar happens to be 48.78. 48.78, and I was trying to get long. Two simple contracts at 48.76. Got very unlucky there. All it needed was two more ticks. Come on, crude, you could have done two more ticks on that, but it didn't, and then reversed very quickly to make a high of the day of 49.41. No, 49.42. So would have been a spectacular trade, 50 ticks plus trade, but just because of two ticks, we weren't able to really make it, and that was pretty much the end of the day here for crude oil. The rest of the time, it just consolidated sideways after making those new highs. So crude oil, looks like it wants to continue to go higher. This post-Hurricane Harvey rally really taking off now. I mean, we traded as low as 45, 80, 46, and now we're all the way at 49. We've gained about 3 points in just a few simple days. That's no easy feat. And it just goes to show the volatility that's in the crude oil market. I mean, on any given day, we have 100 plus ticks from high to low. So there's definitely a lot of opportunity to be had in crude oil. Okay, next up we have the gold market. This one, I took a trade in this one, perfectly executed trade here. So gold was also an inside day. We can see yesterday we had a D-shaped distribution. Okay. But that's not what I'm talking about. I'm talking about an inside day. And here is the range from high to low in the previous day. Here's the range from high to low even right now. I mean, this is all after the market developed and everything. And we're still trading inside. So we were looking for the inside day trade. And before we traded lower, we were pretty much, this was the profile that we saw early this morning, right? So D-shaped distribution, inside day, we want to be long just below value and short just above value. Now, I didn't want to take a short because this market is super strong right now, so there's no real reason for me to be short, but I did want to be long. So I had two contracts sitting here at 40 to 39, and I think I made a mistake with this one. I should have gone 41 to 40 rather than 40 to 39. I think when I was drawing this green bar, I think, I don't know, it was early this morning, probably half asleep, and, I put it in the wrong spot, so I missed an opportunity to get long at that area after the market came down into it. Here we can see 40 to 41 would have gotten me long right on that tail, traded as high as 46, could have gotten, even on just one contract, 50 ticks, which really turns out to be about $500, even on just one contract, right? On just one contract. But since we missed that one, I decided to cancel those trades there. I figured, you know what, if we come back to this low, we're more than likely going to trade lower and probably going to go into this value area here. Switching back over to profile view, we got a value area low and the low of the day here. Not that I really used the low of the day, it just happens to be coincidentally this value area also happens to be right there. So so I took it with a grain of salt and decided to get long between 38 and 36. As you can see, that happens to be the absolute bottom of the day, and markets did trade higher from there now. By the time I took the trade, it was already like 115. This market closes at around 130. And it's not that it closes, but it settles at 130, meaning that anything after 130 is post-settlement trading. And during post-settlement trading, there's usually a very, very slow type of trading, and volume just pretty much dies out. So I knew the risk I was taking, and I knew I probably wouldn't get much out of the trade. I did manage to get at least just 1 point. I had 3 points on 4 contracts. So I got 2 contracts long at 38 and then 2 contracts long at 37. You can see it traded as high after my fill at 40.60. My average, I believe, was around 37.50. and it traded as high as 40.60. So there you go. There's the 3 points I talked about. But I didn't take it off at that high. I actually took it off for 1 point. The reason being, I was looking for a target up here in the 43 to 45 area. But on this bar right here at the 2 o'clock bar, 1:30 to 2 o'clock, which is this bar right here, we see this big tail, but this tail was a lot longer. I mean, we traded all the way up there and then traded pretty much to make this bar into a doji. So I'm like, you know what? It's a big selling tail. I don't want to be part of it. So I took 1 point out of the trade on 4 contracts. Comes out to $400. So not a bad trade at all. Could have been a lot more. Wish it had been a lot more, but I'll take whatever I can get. A profit is a profit, and that was the trade here in gold. But as you can see, you know, the market profile, I don't just draw lines. I use values based on market profile, and this one was a value area low. Lo and behold, happens to be the low of the day for today. And finally, we got the 30-year bond, and this one I had an order here. I canceled it just simply because, you know, the market was just trading sideways all day long. I'm like, you know what? I don't want to be surprised later if it does sell off or probably continue to go lower. You know, me and the 30-year, we have this weird relationship, right, where sometimes I'm right on the trade and sometimes I'm wrong. But most of the time, I make 0 to no money trading the 30-year. So I figured if I don't get in early on a trade, I don't want to get in at all. So D-shaped distribution here for most of the session. Remember, D-shaped distribution is a consolidation pattern. So, you know, it might be hard to recognize for those of you who are new to market profile, but bringing it back to something more familiar like candlesticks, consolidation, what is consolidation? It's just the market trading sideways, right? So look at the candlesticks. See how they're trading sideways? So that's a D-shaped distribution, and then a B-shaped distribution is a trending down pattern. And here's your trending down pattern, right? There's your B, right? A little bit of consolidation here, a little bit of volume. That's your B-shaped distribution. Now, our software for NinjaTrader 8 is so wonderful. You might not have to guess any longer as to what profile shape you have. All you can do is just very simply, with the click of a mouse, pretty much decipher and take a look at the distribution shapes yourselves, right? We have a D followed by a B. Very nice and simple trending down pattern. Not looking to get long on a trending down pattern. This would have been the place to get long, but once again, you know, it's not really, it was too late in the day. I mean, around 1 o'clock is when the market got down to these levels, and I said, you know, it's too late. This market closes in 2 hours. It's not going to bounce back from there. Also, I mean, they've been selling it all day long, and it's mostly been profit takers. On this day, we traded a lot lower, but institutions were buying a lot. Okay, they were buying like crazy. This was the holiday, so we're going to skip this day. Not a lot of institutional flow on that day. And then on this day, as the market was trading higher, these guys were selling, which means whoever got long here was profit taking and continued the profit taking today. I mean, as you can see, we consolidated. Tons and tons of institutional selling. Even if it's selling to close, it's still selling, right? And if you sell something, the price of the asset should fall down. So that should be another reason as to why I didn't want to take this long, especially that late in the day. So far, it closed at negative 15,000 in balance. Still, I don't think it's fresh selling. I think it's profit taking. But because profit taking is the same thing as selling, it's not really the time to get long at the moment. The institutions are taking their profits and they're selling. You know, why should you be buying? I think the market realized that and finally pushed lower from there. All right, so that's all the time I have for today. Those were some of the trades I took for the day. And what I'd like to do now is, for those of you who are watching this for the first time, I'd like to invite you guys to the website, www.themarketprofile.com, and claim your 14-day free trial. And You'll watch me trade live every single day for those 14 days, for those 2 weeks. You'll watch me trade live every single one of these markets, plus other markets as well. I don't just trade these four. I trade the S&P, I trade crude, I trade the euro, I trade the yen, the NASDAQ, sometimes even the Russell, and many other contracts. And also, you'll also watch me manage these trades live, real time. So you'll watch me pretty much, I'll teach, and you'll also watch me use the indicators in order to find these areas of value where I want to get long and get short. And I'll also teach you the strategies that we use based on market profile every single day. So definitely swing by www.themarketprofile.com. It's free, 14 days. See if this is something that could work for your trading. Other than that, if you guys like this video on Facebook, make sure you guys click like, and if you want to comment or have something to say, definitely leave that in the comment box below. I hope everybody has a great rest of your day, and I will see everybody again tomorrow. Thanks, guys.